After two major bank collapses this weekend, there's now a push to assure you that your savings are safe.
Yeah. U.S. regulators took emergency steps over the weekend to make sure that Silicon Valley Bank customers would have access to their funds. That's a big deal. Treasury Secretary Janet Yellen spoke about this yesterday, but said the actions are not considered a bailout.
During the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again.
And yesterday afternoon, regulators shut down New York-based Signature Bank, which was a big lender in the crypto market. So what does this all mean? And should you worry about where your money is? Here with some answers, Howard Lutnick. He's the chairman and CEO of Cantor Fitzgerald. Nice to have you back on Good Day New York.
Nice to be here with you.
So why should we care? What should we be worried about?
All right, so if you have $250,000 or less in your bank, don't worry. The only line you should be on is Starbucks. Don't wait online at your bank to get your money out. You are safe. The U.S. government has always said they'll back you, period. Every single bank. But the issue is, if you have more than $250,000, your payroll for your small business, this is more about businesses than people. If you have that money in the bank, if the bank goes out of business, you are literally lending that bank money for your rate of interest. So you're saying to yourself, wait a minute, what do I get on my deposits? Like 0.75%? I'm lending the bank money? The answer is yes, and everybody's just figured that out.
So let me ask you, Howard, how did we get to this point? Who's to blame? I need somebody to blame here because I'm a little worried. What's the market's going to open up like this morning?
All right, so the market's going to open up the regional banks, not the big four, not J.P. Morgan, Citibank, Bank of America, and Wells Fargo. They're in a different category. They're actually regulated differently. They're systemically important, and they have tougher rules. But all the regional banks had kind of soft rules. What the rules said is, if you bought securities and they went down, don't worry about it. So all of their management, Silicon Valley Bank, they bought mortgages at 1%. And we all know mortgages are not 1% anymore. They've lost a ton of dough. And that was the problem. It was bad. If you want to blame someone, blame management that bought ridiculous securities and lost a bundle. So they didn't lose your deposits. They lost what they invested your deposits in.
Gotcha.
And Howard, you said that this issue is relatively insulated to a bank like SVB, a bank like the one that went sort of under this morning here in New York. Are you seeing this as something that is going to expand outside of these banks, or is this decisions that they made in particular?
Well, what happens is people with their payroll is in a bank, $5 million. They'd say, well, I don't really want to have $5 million in a bank, right? Because if that bank goes out of business, I lose serious money. I could lose 20 cents on my deposits. So what am I going to do? I'm going to pull it out. I'm putting it in U.S. Treasuries. U.S. Treasuries rallying up a storm this morning.
Yeah.
Regional bank stocks, the smaller banks, all those stocks down 30 to 50% so far this morning. It's not the whole economy. Now, people worry, if all the banks are having a tough time, how am I going to get a loan from one of these banks that's worried about themselves? That's the worry. The worry is in the near term, how's that going to happen? And there's not really much the Fed can do. They did smart things, okay? By backing those deposits, they did smart things, because they'd be blaming themselves this morning instead of the fact that just people with too much money in a bank are worried. They should do things. The word that everyone's going to learn is something called a repo. Repurchase agreements, Treasury repurchase agreements. If someone says, what's that? That's how people with big money bank their deposits. They put their money in a bank, but they say you have to put U.S. Treasuries behind it. And that is how $9 trillion is overnight normally done. Small people put it in banks. You know what? They're thinking about it now, and there's nothing you're going to do to unthink them. You know, the famous, you can't unsee what you've seen. They all saw Silicon Valley, which was all corporates. They didn't really have any deposits from real people.
Right.
Signature Bank just had bad management investing.
A lot of people looking at the White House. How do you think the Biden administration has responded?
So far, the smart people that they have in the administration have done smart things. So far, they've done just the right thing, right? But sometimes there's just nothing you can do about it. People with too much money in a bank are thinking, why am I lending my money to a bank? I should put it in U.S. Treasuries, or I should spread it out. A lot of people spread it out. If you have $1 million, put it in 4 banks. Then it's all protected. That's okay. But you got to be smart, and people are being smart right now, and that's tough. That's tough.
Let me ask you, this is not going to be 2008 all over again with the Lehman crisis, right?
No way. The mistake they made in 2008 is they didn't do this for Lehman Brothers. They lost their political will. If they hadn't protected these guys, they'd be blaming themselves today. But you know what? They didn't protect the shareholders, get zero, bondholders get zero. They said, look, if you got a deposit in a bank, I don't want you to sweat it. And they did that. So they've done the right thing for the United States of American economy. But real people are going to think to themselves, you know, I got a small business. I've got $5 million. I sold a building. I put $5 million in the bank. Should I be worried? And the answer is yes.
There's still a lot of uncertainty out there. I mean, do you think that Wall Street could potentially look at this as a domino that may see things falling, and that's going to, all of a sudden, that's going to affect real people because the numbers are just going to go crazy on Wall Street?
Yes. You're going to see banks going down. So people are like, I saw Charles Schwab's stock was down. Why? Charles Schwab's not a bank. It's a broker-dealer. By the way, if you have your money in your securities firm, $5 million of protection. So the world's not coming to an end. People are just figuring out, I probably have too much money in one bank, but not the big guys. The big guys are fine. You know, so they're going to move it around. Treasuries are going to rally. Regional bank stocks are going to fall. Getting a loan from a regional bank probably Thursday, probably not that easy.
Not going to happen.
Right? Fed may delay. Fed may delay, not raising rates so quickly. They're going to take their time. Probably true. Will ultimately they go back to raising rates again? They will. They will.
Howard, if somebody's watching right now, small-time investor, seeing their pension go out the window, what should we do? What should we not look for the next month or so? How should we buckle up for this?
Look, the economy of the U.S. is in pretty good shape. Strangely, pretty good shape. They've taken all these rates, right? The stock market's not going anywhere. Yes, these regional bank stocks will be tough, right? There'll be some shakes, but basically the economy's okay. You're not losing your pension unless you took your whole pension and put it in Silicon Valley Bank, and even then it was protected. So the answer is, it's just going to wobble and shake and make a lot of news, but the answer mostly is these regional banks invested poorly, and their shareholders are going to suffer. But the U.S. has basically acted that says you shouldn't suffer. And I think that is extraordinary of them, and I'm proud of them the way they took it and handled it. If just Silicon Valley Bank had gone out, I don't think they would have protected the deposits. But because the second one went and they were afraid of more, they did the right thing. They stepped in, and I think that should give us at least pause to know that the people running this place and running this country are thinking things through and doing smart things.
Well, thank you for making us feel better, Howard Lutnick. Usually we have you on here to talk about the Cantor Fitzgerald Relief Fund, and that's still going strong, and you're out there helping so many people.
Of course. You know, look, Cantor Fitzgerald, we run a repo business that we talked about. So we have huge sets of deposits all backed by U.S. Treasuries. So that's kind of the grown-up way of doing it, and I think everybody's learning the grown-up way. I think when we're done with this, people will be a lot smarter. But don't wait online for your money. It's protected. $250,000 is protected. Go to Starbucks. Don't wait online at the bank.
Exhale a little bit.
Thank you. Feel much better. Appreciate you coming on this morning. Thank you, Howard Lutnick.